How's it going, everyone? It's Sam. Today, I want to talk to you about a really interesting company that's over 16x their revenues just from the last quarter. Now, this company is getting much cheaper every single day, and I want to talk to you a little bit about it and the position that they're in before they have their next earnings. Now, I want to say thank you. I'm glad to be back on the TipRanks channel. My name's Sam. I'm from My Financial Friend, the YouTube channel, and I'm coming here once a week to talk about growth stocks with you. Now, last week we talked about Disney, and since then, over the last 5 days, it's actually gone from about $177 up to $184 on some really good news about Black Widow. So they had released their numbers from the first weekend of the Black Widow, and they had some massive numbers. Many companies don't do this, and this is something that's a little bit unprecedented, but they had 80 million in their domestic debut, and they had an additional 60 million in rental revenue on Disney Plus. So this is something that we kind of talked about last week, the growth of Disney Plus. Always nice to see a stock that you just talked about go up pretty drastically, but we're not always going to have this, but I will try to check in on old stocks every once in a while. Now, if you guys like this kind of content, please leave a thumbs up. Please hit subscribe to the TipRanks channel so you can see me every single week, and a lot of the other people on this channel like Richard and Julie give updates all the time. Thank you guys for that, and let's look into it here. So let's take a look at the stock for today. The stock today that we are looking at is none other than Voyager Digital. So this is a smaller company. It's a company that is a crypto exchange. Now, right off the bat, this has come down a good amount. It's down significantly from its highs, from $29 down to $13.29. Now, it's a $1.9 billion market cap, but the growth on this is crazy. So this is a Canadian company. We'll take a look here at what the company actually does, how it makes money, but take a look at their revenue growth. So you can barely see it here, right? So this is May of last year, 300,000 in revenue. Then 2 million in October, then 3.7 million in February, and then recently, this last quarter, we hit 61 million in revenue. So it's 16x from last quarter. Now, a lot of people are expecting this to continue at a pretty high rate of speed and pretty high growth rate. So how do they actually make their money? Let's take a look at one of their recent presentations. So their net deposits are 14 million a day from their clients. Average spread revenue 90 basis points, so about 0.9% of each trade they actually make. Now, they say that the cost to acquire a client is about $40, and then they get $100 worth of monthly revenue. I don't know about you, but that seems pretty good, right? If I could acquire a client for $40 and then I make $100 a month on them, that's great. Now, user growth is 35% month over month, and they've been growing like crazy. They have 3.3 billion in assets under management. They have 55 digital assets, and they've actually been adding to this, and many of them pay interest. So that's a lot of the reason why a lot of people like using Voyager Digital. Now, they are going to try to continue to expand their business, and they are going to try to get into other things besides just crypto. They're going to try to add stocks. They're going to try to add different parts of their business. But right now, you can see how people usually come in. They want interest rates first, and then they get into some of the major coins, right? They might get into like stable coins at first because they pay 9% on some stable coins, and then they move over to some of the major coins like Bitcoin goes down on a dip. They decide to buy a little bit, or Ethereum, and then they get into the altcoins. And this is where they get more profit because people typically trade a lot more with altcoins instead of long-term buy and hold. You can see that they had only 5 million in assets in December 2019, and now they have over 3.3 billion, which is a 660x. Now, it's been about a month and a half since their last earnings report, but you can see here that they are in a pretty good capital position. So we don't have an update recently. This is actually from February. They said that they had 146 million, and their balance sheet is stronger than ever. They did file some paperwork recently to possibly raise some more capital, which is interesting because they also are actually buying back shares. So they said here they adopt nominal course issuer bid to repurchase up to 5% of common shares. So what does this mean? Why are they doing both of these at the same time? Well, they put this in and they actually started buying back their shares already. You can see this on some Canadian websites that they've started to buy back their shares already. Now, they started to do this in June, and this is when we started to see a dip, or this is when we saw a nice buy-in price for Voyager. So I think that they put out the paperwork that, hey, we could raise money in the future just so that if the price goes up dramatically, that they can go back and sell some shares. But right now, they're not doing that. Right now, they're seeing a great value to buy back their shares. So this makes sense to me that they would put both of these in place so that way they can really control their own future and control the number of shares outstanding by buying back when it's cheap and selling when it's high. That's really why companies go public in the first place, right? They go public to be able to raise money. Now, of course, we still have their next earnings report here soon, but they came in very strong with their last earnings report with an operating margin of 50%, operating profit of $30 million. Now, whether they continue to increase this or whether they decrease it in the future, we don't know yet, right? Obviously, the future is up in arms for crypto, but analysts are feeling fairly strong about this company. You can see here that's actually covered by several analysts, and they say that it has 106% upside. So 5 different analysts cover it with coverages from $44 or price targets from $44 all the way down to $22. But all of those are significantly more than where it is now. Even the low side gives significant upside from the $13, $14 price that it is now. So what will happen in the future? We'll have to see. A lot of people are worried about crypto in general. And when they are worried about crypto, they sell off these exchanges. They sell off Bitcoin miners. They sell off these other kinds of stocks. However, I will say these companies actually do quite well with fluctuations in price, because what are you doing when the price goes up and down? You're buying and selling. You're buying the dip or you're selling it because you're panicking. What is bad for these companies would be if the price went down and just stayed down significantly. But they're still making about 1% on trades. So when there are massive dips and massive uptrends, and when there's a lot of fear in the market and then a lot of greed, they actually do quite well. So right now, we are waiting for their next report. I would love to see an update from them. We haven't gotten one in a little while. They used to give monthly updates on their growth, but now they have slowed that down. Of course, do your own research. I'm not a financial advisor. If you guys want to check out TipRanks, you can check out down below. I have the ultimate plan here, so it gives me access to all different kinds of things on the website. So definitely check that out underneath the video if you're interested, and I will see you in the next video. Bye.